Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. It's Friday, finally. Welcome to this Friday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a couple guests for you folks today. We're going to be joined at 8:15 by Bill Corcoran. He's the founder and CEO of Open Trades. And then at 8:35, we'll be joined by Tracy Reiniak, stock strategist at Zacks Investment Research. But in the meantime, we're going to be talking about that jobs number coming up today. We also have some big earnings still trickling in. CBS, Starbucks last night, and we got some DOJ news and Icon increasing his stake in HLF. Joel, how are we doing in the S&Ps this morning?
Kind of a quiet range this morning, only 7 points. We are holding yesterday's low. That's an important number, 79.75. 79 even was your low on July 8th. Looking at the close right now is a swing area, holding that right now. Crude finally getting a bounce, not over $45 yet. And gold and silver are trading in the red. Dennis, how you doing on this Jobs Friday?
Getting ready to see some volatility here, Joel, and we're not getting very much here in the pre-market, I tell you. We are just hanging out, and everybody's got their finger on the trigger, but we're waiting for that 8:30 number.
All right, well, let's get to the news and get to our first guest at 8:15. That's Bill Corcoran.
Okay, well, news here. It's actually getting a little bit lighter here now. After 266 stocks reporting yesterday, you got a light day here today with earnings here. But there was some nice reports from last night, so we'll jump into those ones here. GoPro pulled a Fitbit here, Joel. GPRO down 20% here in the pre-market. It is off the lows, but this just reminds me just of Fitbit. Obviously, you had the big collapse there yesterday in Fitbit on their disappointing earnings report. GoPro, it's similar. It's like a one-trick pony, and the one-trick pony's trick didn't work very well, and you're seeing people not buy as many GoPro cameras, probably because they already own one. Spencer, give us the details from the GPRO report.
Yeah, well, they were a one-trick pony. They tried a second trick with their new drone. Apparently, the drone is not working too well. Q4 adjusted EPS 60-cent loss versus a 36-cent loss estimate. Sales 24.5 million versus 316 million estimate. They expect to return to profitability in Q4 of next year. They do see fiscal year sales that came in lower than the estimate. Adjusted EPS came in lower, and then basically everything came in lower. And they have this new Karma drone is their new product. It's supposed to be their second trick, Dennis. And apparently there's not so much karma here for GoPro.
I mean, that's the wild card. I guess if they could get into the drone market, that could be the next step to pick them back up here. They do have, some cash, but obviously now they're starting to burn cash with the 60-cent loss here. They're saying they're going to go back to profitability, but I just don't see, the buzz. And this is what these things are all about. Like, even when the Fitbit, I've got, like different people on the street talking about Fitbit. My buddies are buying Fitbits. Now you don't hear anything about Fitbits. And it was the same thing 2 years ago. My neighbors show me, oh, GoPro camera, these are the best things. And then somebody else is going to GoPro, and you're hearing, and there's a buzz. Once that buzz stops, that's your sign that, it's probably over. And I just don't know until they get, another product to give them the buzz again. This, is, I don't even know if you can say it's like a cash cow here now, because they're not selling as many GoPros. When they're losing 60 cents in the quarter, that's scary. Now that, like I said, they said they're going to return to profitability here, but at the same time, they need another product to work, or this stock is just going to continue to probably drift lower.
Real quickly, this issue had been a 2-for-1 stock split here since October. The street leaning the right way going into this one, even yesterday, pounding the thing. I'll give you two levels. Your pre-market low comes in at $9 even.
That was the open.
Yeah, all-time low on GoPro comes in at $862. So $862, the 9 even. That's a buy area, only to cover is short, because this thing may be going off the board soon.
Wow, I don't think that because I got a lot of cash. So Joel's getting a little bit too excited there. But $9, I love the number that you're giving us there, Joel. That's where it opened for trading when it came back on, and when it reopened for trading after the report because they halted the stock. GoPro has done that a few times. A lot of stocks don't do that, but they halted it after hours for the earnings report, and it reopened right at 9 on the button. And it's a good news that it popped up from that low. And last time they had a disaster report, it popped up as well. So that's the only thing going for it. The thing going against it is if you do look at Fitbit as an indicator there, Fitbit opened the day yesterday and then continued to drift lower and closed near the lows down at $8.51. So I don't think they're going to fly back into this thing like they did after the last earnings report and start buying up to 10, 11, $12 because, fool me once, shame on you, fool me twice, shame on me. So I think people are turned off on this company here right now. And I just think it's kind of dead money.
Big loss.
At least for now.
Yeah, big loss. Yeah, Fitbit didn't do anything yesterday. Made a new low at 837. So more of the same here. And if you took it on
Yeah,
short,
these
good
two
job.
companies are just following the same path here. So, they trade together. It's funny if you even put the charts on top of each other. I mean, the companies really don't have anything to do with each other other than they're both one-trick ponies here. But if you look at it, Fitbit was halved here since October too. So it's been a horrible 30 days of trading for these two stocks. Starbucks. Let's talk about another stock that actually had a pretty decent report here. Spencer, give us the numbers from SBUX.
Yeah, not bad. Q4 adjusted EPS 56 cents. That beat by a penny. Sales of 5.71 billion versus 5.58 billion estimate there. So bit of a beat. Fiscal year 17 adjusted EPS came in a little lower than the estimates. They do see sales growth in the double-digit range. They also raised their quarterly dividend from 20 cents to 25 cents per share. So overall, not a bad report.
They said a lot of good things here, and the stock lifting up. But again, this has just been the theme. It seems like, when the stocks are popping now, there's so many worries in the overall market, and we were just, in the chat there just this morning, Don was asking, is this pre-election nervousness? Is this, market getting ready to collect or to correct? I think, it's Trump nervousness. I really do. I think, people are concerned that he might actually get in and portfolio managers are taking money off the table. And every time it seems like you see a big pop in a stock here right now, it seems like it gives it back. And, we saw that in the case of Alibaba. We've seen it in the case of a number of different stocks. I mean, Facebook had a great report and they sold it off. So they want to sell stocks. And if Starbucks had a pretty good report here, it pops up to over $55 after hours. It can't even hold those gains for an hour. And it's going back through 54, back through 52, and it's right back into the 52 handle here now. It's still positive on the day, so you can say, well, that's good news. It didn't go negative. But at the same time, stocks just can't seem to hold their gains right now.
Yeah, a lot of overhead supplying this one. Yeah, if you were leaning on your September 9th high of 55.20, you got a pretty good trade-off there, folks. 55 and a quarter is your pre-market high. You only got one shot at it, and one shot only. Now it's back down. So any traveling north here, first look at your two-day high at 53.50, and then another triple top at 54. So all kinds of resistance. Coming back on the downside, I mean, if this thing goes negative, the close of 51.77, all you have is that 51.34 low and then $50. I mean, how much more coffee are they going to sell? How many? I mean, where's the pizzazz? I mean, are they opening more stores? Are they having new products?
Where are they opening more stores? There's like 3 on every corner in New York, isn't there?
I'll tell you what they're testing in New York now. They're testing Starbucks as like an evening hangout spot, like they sell alcohol in the evenings. So so it's like an alcohol like loungy spot, and
it's kind of almost like the Walmart, where Walmart got so big and they don't have any other places to expand. So growth inevitably slows here. And I mean, there's Starbucks, even think about this, years ago, the perception of so many Starbucks. Remember the Simpsons episode where they were in the mall and Homer's in the mall and they're, looking at this store and then, no, you got to go to the store. We're turning the store into a Starbucks. And they turn every store in the whole mall, it becomes a Starbucks. I mean, that's kind of, what I see here too. I see it in Toronto too. There's literally in the one corner, there's 3 Starbucks on the same corner. So 1, 2, 3, 4 corners, 3 corners have a Starbucks. I mean, it's just there's so many of those stores, and where are you going to continue to open them? People who love Starbucks are going to continue to go there. I just don't know where the growth keeps coming from.
Well, the thinking is if they can get people in at different times of the day. So if they were to maybe expand,
they have to come more.
Right, it become more their, if this New York thing works out, what they're trying there, where they're more of an evening lounge. They serve food, like actual food, supposedly, like real, not just like
'Cause their food's bad.
Right. So supposedly they're trying to serve like actual, I don't know, higher quality food and alcohol, so it becomes more than a coffee shop. So I don't know. That's probably what they're thinking. I don't.
You know what I get? The rare occasion I go there, I spend like $2. I get a double or triple shot of espresso, and I just have them put a little bit of coffee in. They charge me $2. I don't pay for that $5 drink. No way. I think they call that like a red eye or something like that. But or
To
they,
get the red out of your eyes.
yeah, if
Oh,
I'm real
Visine.
tired or something.
They can name it Visine.
If I have a late night or something, watching sporting events or whatever. But yeah, but Starbucks, look for it maybe to go red on the day.
Well, we'll see. $50, a big number you're giving it there too, and it is holding on to the gains. But I think, like you said, overhead supplies and gets anywhere up 54, $55 again. Lots of people looking to ring the register. FireEye is your good story here of the day. Speaking of eyes, FEYE is trading up $1.80 in the pre-market. A stock that has really been beat up again, and it's all about sentiment again coming in. Some of these stocks that have really been beat up are getting pops, unless you're Fitbit or GoPro and your business looks like it's in trouble. A lot of these stocks have really been beat up going, and the reports have actually been lifting. So I guess a little bit of the fade trade here too. You could say fading the sell off ahead of it, and then now buying it on the earnings report. A little bit of short covering maybe in there too. But Spencer, give us the details from the FEYE report.
Q3 EPS 18-cent loss versus a 31-cent loss estimate, so that's good. Revenue 186.4 versus 182.6, so that's good. They do see Q4 revenues a little bit below the estimate, EPS a little bit below the estimate as well. Actually, sorry, above the estimate. Fiscal year revs came in line, and fiscal year EPS came in a little higher.
Good enough is good enough here. And FireEye, like we said, up 17% here in the pre-market. When I'm looking over at my Russell 1000, it's your leader. It's up the most here this morning. So it's a nice pop here for FEYE. Joel, find us some technical levels.
Well, it's holding up there. I mean, that's the good news here. 1285, that was your high. 1280 last print. So for now, it looks like you might be able to hold these gains. I'd see what happens here in the 13 handle. Pair of highs at 1322 and 1330. Above that opens up closer to 14. But the fact that it's holding its gains now, a much better look at chart than Starbucks, who's $2-3 off its high already. This one's holding in there.
Quickly, let's just get Weight Watchers and WTW. It is up 9% on its report, too, and kind of fits the same description of stock that has not had a good year. It started the year way up at $25 on the Oprah Pops, and it's down here at $10 here now. 10 has been holding. It did take it out yesterday, but quickly got back above it. Now we're up here at 10.89 in the pre-market. Spencer, quick numbers on this one.
Yeah, Weight Watchers Q3 EPS 53 cents versus 45 cents. Revenues 280.8 million versus 290 and a quarter, so a bit of a miss there. They did also update their fiscal year EPS guidance to a 95 to $1.05 range versus a 94-cent estimate. So they like that guidance.
They make some money. That multiple, just doing the quick maths, around 9, so it's not like you're buying something that isn't making money here, but I just don't think Weight Watchers is the kind of business. I know Oprah's involved with it, but I don't know if I'm jumping in here with two hands saying, oh, Weight Watchers, everybody's going to, because it's been around for a lot of years. And I don't know where the growth really comes from in Weight Watchers either.
Pop to 1089, trading at the high of the session. We've flirted with $11. There were two spikes over $11 on takeout rumors. One of those spikes took it to $11.40. The other spike took it to $11.44. So let's see. Get hold above 11, hold 11. But I just tell you, the two times that it got up into this upper 11 or mid $11 handle, right back down. Kind of hard to tell on this chart, but you can see here those pops are 11. Are short-lived. All right, 8:14, and we have our first guest of the day, Bill Corcoran, founder and CEO of OpenTradeZ.com. We'll be right back with Bill.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need thinkorswim. To experience everything thinkorswim has to offer, open a TD Ameritrade account today. thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elcon, along with Dennis Dick and Spencer Israel. We have Bill Corcoran on the line. He's the founder and CEO of Open Trades. Bill, how you doing today?
Doing awesome. How are you guys doing?
We're doing good. Getting ready for this jobs number. We're looking for a little volatility here before the election. Tell us about Open Trades and how you started it and how it's going.
So I started Open Trades just recently, just launched Open Trades. I had been a CEO for a major trading education company for a couple of years. Ironically, it's the one that I first started learning to trade from and heard about it on a TV commercial. Ultimately, obviously started trading, became an instructor with them and became a CEO. And that company was just bought out. So I've gone out on my own and continuing to educate option traders is mostly where our wheelhouse is.
You've been in the trading education industry for over a decade, and as you mentioned, you were the CEO of another trading company for a few years. What kind of trends are you seeing now in the industry?
It's interesting. As you're seeing in a lot of industries, you're seeing consolidation between companies. A lot of companies are coming in and buying up some of the smaller ones and then being bought out themselves. It's been a tough industry. It really has, between regulation and, just the economy in general. We're not seeing the involvement of retail traders like we used to see back in the mid-2000s, where, you couldn't turn on a TV or a radio without hearing about a trading education company out there. Now it's become much smaller. A lot of those companies have gotten squeezed out and consolidated into some of the bigger brokerages, and there are very few independent companies left for the average Joe to go out and learn to trade. What we have seen, interestingly, is a big spike in small mom and pop operations that have just kind of kicked off and started on their own, and that can be a good thing. It can be a scary thing. You got to be make sure you're testing out and watching what these folks have to teach you.
Bill, what do you think as the reason for that? Why you don't see as many, as the buzz around trading that we saw 5 or 10 years ago? Does it have to do with, high frequency trading maybe pressing out a lot of traders? Has it become tougher to trade? What do you think is behind, the fact that I don't see these infomercials on trading anymore, like regularly?
I think a lot of it has been regulatory. SEC came in several years ago and really cracked down on the industry, and I personally think it needed to happen. But as government often does, sometimes they take things a little far and become very restrictive. The other thing that's happened is that you just don't see the retail involvement in the market the way we used to see. Boy, I'll tell you, back in the mid-2000s, everybody wanted to be involved. And then I think some of this is an overhang from, obviously, the tech bubble bursting in the 2000s, the real estate market, leading to the Great Recession, if you will, 2008, 2009, which is kind of sad because if people really understood how to do this, 2008 and 9 was just an awesome time to make money if you understood, short-term technical analysis and you were very nimble. And, we limit our risk by trading in the options market. So there's opportunities out there. I just think that folks are gun shy, and you don't see the retail involvement, and you don't have big companies out there, beating the drum on the TV and radio commercials to get people involved.
You know what? It's a great point you're making there too. And then obviously a lot of people got really burned in the financial crisis, and I think, it's taken a long time for people to start to trust the markets here again. I think maybe some of that trust is slowly coming back, but some people call this the most hated rally because everybody sold down there 2008, 2007, 2009, and now they've watched the market go from the S&P 666 all the way up to 2100 here, and a lot of people haven't participated, so it has been a hated rally. So I guess you got to get past all those people who got burned and get new people into the markets. And obviously that's been maybe one of the major issues. What about volatility here? Because volatility, like you said, in 2007, 2008, 2009 was fantastic, and I agree with you. Those were my best years as a trader because I seem to always make more money when increased volatility. But with this low VIX here right now, it becomes tougher as a trader to make money because you don't have the movements that you have in the past. How are you trading with the low VIX?
It's kind of interesting because the VIX obviously being low and it's been bouncing down here. Now we've seen a nice pop over the last few days. Some people are going in and actually buying volatility itself. Other traders are using it to hedge, but the VIX has been fairly low. But what's interesting is that you've got a number of stocks that have really been moving. And for a nimble short-term trader, especially in the options market, there's been some real hot spots that we've been able to trade. You look at some of the trends in some of the, I'll call them legacy tech stocks from back in the 70s. Back in the late 90s. You look at NVIDIA, you look at Microsoft, you look at some of these these are just legacy stocks, Intel, that have offered very nice trends despite the low volatility. You've been able to do some trend trading in there. Now, with what's going on in the market right now, ironically, I think, part of the reason we're having so much trouble reversing this trend and the market is showing so much uncertainty is a lack of the new trader in here. We all know that once the mom and pop investor really goes all in, that's when markets tend to turn and at this point would turn lower. So we've been playing with a small number of stocks that are really giving us some great moves. You guys were talking before I was up about some of these stocks that are announcing earnings and they've been just great fade opportunities off of the earnings announcements. Amazon as an example, they got beat up on earnings and rallied right to the 50 moving average. We came in and took a fairly sizable put position on Amazon and just crushed it in a couple of days. I mean, it was an awesome setup. You were talking about Starbucks this morning. I'm looking at Starbucks for an opportunity to do that as well. This market has required us to change our trading style where we, normally have been trend trading some of these stocks with options that go out 2 or 3 months and then selling calls against them. Now we've had to switch to much more of a day trading or very short-term swing trading horizon to adapt to what the market is giving us. But the lack of volatility has not been market-wide. It's not like there are no stocks out there that are creating volatility. Buy puts on GoPro, you did all right this morning, right? I mean, it's just there are places where the volatility has been there. It's just been harder to find it, right? It's not market-wide.
How can a relatively small independent trader possibly compete against the large firms and the HFT algorithmic trading that we see so much of every day?
Joel, it's an interesting question, and I think maybe to a degree that may be keeping some people out of the game. But the fact is that we actually have an advantage once you learn to master it. And we all know trading is not easy. In fact, on my website, opentrades.com, when you go there, I've got an introduction, and the very first thing I say is, look, if you're looking to make money quick and easy in the market, you need to go somewhere else because this is not it. Trading in the market is not easy. It's not quick, but it's worth it if you can learn to adapt to the market. And the thing that we have as an advantage as small traders is speed, and we're nimble. We can adjust ourselves to the market. We're not managing multi-billion-dollar portfolios where we're a big ocean liner. We can't get turned around. We can turn around right now. I can switch a trade from a bullish call position to a bearish, bear call spread, or turn it into, where I'm financing puts by doing that. And so we can do that fairly quickly. But the problem is that most people perceive that we've got a disadvantage. And I will tell you that, if folks will just stay focused on good, sound technical analysis, and being really good at execution, that the small guy not only can compete, but can significantly outperform the big institutional trader.
I mean, just not competing directly against them. Like I've said, multiple times I've addressed this. And the one thing is, high frequency trading is focused on market making and short-term scalping. And if you can get away from that, 1 second, 2 second, 5 second, 10 second trades where you're trying to scalp the spread, I mean, you can't compete with these guys on the spread because they're, got too many advantages over you. But, when you just extend your time frame out to hours or days or,
Exactly.
swing trading, there's no competition. High frequency tradings aren't trading in that time horizon. So if you're in that like 2 week time horizon on trades like a swing trader, I don't think you have much competition at all. So I completely agree with you there, Bill. Just one last question before we let you go. So just tell us, how does a person come from, being, regular, Joe average investor to becoming a successful trader in the market? So how do you make that transition to maybe, nibbling in to actually trying to do this as a full-time job?
That's really where my wheelhouse is. That's where I come from. I was a police officer for 13 years. I was in the military before that. Owned my own business. I've tried it all, and it's a process. And I think that's where people really lose it with regards to making that transition. They don't understand it's a process, not unlike going through college. I get students who have been learning to trade for a year or two, and they expect that they should be making a ton of money. Y'all didn't make a bunch of money when you were a freshman in college, right? I mean, if you're an engineer, they didn't let you build a bridge after 2 years of college. There's a process. You have to go through that. But if people will treat it like a college education, the rewards are so much greater, and the freedom that you have as a trader to go out and do what you want, when you want. And yes, it's a challenge. Of course it is. If it was easy, everybody'd be doing it. But it's just that idea of staying focused on the fundamental skills. Learn those fundamental skills. We teach some free stuff on opentrades.com. We offer some things on our website, on our Facebook page. Other companies are out there. Well, I'll tell you, the OIC and the CBOE have done a phenomenal job in options education. We do a lot of workshops at CBOE and live workshops there. So what I would tell people is, look, just get your feet wet. Start learning like you would learn anything else. If you're going to learn to golf, you go online and you read about it a little bit, but then you got to go out on the golf course. So I would encourage people to start the process, right? You're never going to get there if you don't start. But once you start, don't quit because, it's a slow process, but quitting ain't going to speed it up any, right? It's you got to stay involved, stay active, get on shows like yours right here is a great place for people to gain that knowledge, gain that information, and do it, in a low-cost way when they're starting out.
All right, Bill, we have you here at 828. I don't know, do you have any positions going into the number here? Do you, I know you seem like a real technical trader. Is there anything you have on? Do you want to stay with us through the number, or do you got to get back to your screen? Okay.
I can stay with you through the number. We're watching some things for sure, and we've got a couple of small positions that we took a dibble at yesterday.
Okay, we're looking. S&Ps are traded down $1.50 here. The pre-market high is at 86.75. The pre-market low stands at 79.75. That was pre-market low, is at 80.50. Yesterday's low is at 79.75. So that's a big level here to hold on the downside. On the upside, you can clear that pre-market high. Let's see what happens at like 2090. Nice round number there. I have a daily pivot. Bill, I mean, if it's a real hot number, then everyone's going to be worried about interest rates, going up in December, which seems to be the foregone conclusion again. And if it's a poor number, everyone's going to be like, oh, no, when interest rates are never going up, the economy's going in the tank. There's nothing they can do. So two scenarios there. You would like to add anything to that, Bill?
From a technical perspective, one of the things that we're watching is the 200 moving average. The S&P is right at the 200. They traded down close to it yesterday. We've been extended for 6 days here. I think a lot of bad news may be baked in here. So any kind of news that's perceived in a positive light by the market could give us a good bounce.
Okay, we are coming up here seconds. The S&P's got the 1 minute chart here. We should get some action. 2084, that's your last print. Let's see what the traders want to do off the initial number.
It's worse than expected. We're coming in under lower than expectations. Waiting for the exact number to read off in Pro, but I'm just seeing it from the news desk right now. So they're typing it, throwing it in Pro. We got it. Brent, what do you got for me? I got it. There we go. Where are we? Oh, there we go. No, don't see it actually. 161 versus 175 is the number. That was non-farm. 161 versus 175.
Bill, have you
Oh,
ever
there we
seen
go.
a quieter response in the S&P futures? Oh my lord, we haven't even moved 2 points yet. Unbelievable. Any comments, Bill, before we let you go?
Really muted. I really think we're not going to see a whole lot out of this market that's going to give us really swing or even trend trading opportunities until after the election. Nobody knows what to do here. It's obvious in the reaction to the jobs number. We sold off to a couple of areas here that may be important support down there around the 200 moving average, and I think the market's in a holding pattern.
Okay, Bill Corcoran, founder and CEO of OpenTrades.com, joining us here on the Pre-Market Show. Bill, thanks for staying a few minutes extra. We enjoyed your commentary. I'm sorry there wasn't a little bit more action to cover, but we'll move on and we'll have you on again soon.
I appreciate it, guys. You guys take care.
All
Have
right.
a great day.
Thank you. 161,000 jobs added in October, a bit lower than expected.
Yeah, I had a filter on, so I was not seeing that headline in my prayer. I was like, where is it? Where is it? Well, I had my earnings filter on, so of course I didn't see it. So yeah, 161 versus 175. Prior was 156. U.S. unemployment rate for October 4.9%. That was in line with the estimate. The prior was 5%. So there are your numbers there, and not a whole lot you're seeing, Joel?
No, I mean, if this is going to be any indication of what the trading day is going to be like, Spencer, maybe me and you should just leave for the Michigan game right now.
That would be great.
Remember when we used to pop like 15, 20 points and then sell off 15 points and then rally 10, 12, 15 points again? Where are those days, man? These job numbers, this is the second one in a row where I'm just looking here. I'm getting all ready for the big move, and there's just nothing. It's horrible as a trader. I want to see a big pop or a big drop there. I don't care which way, but I want to see movement.
I can see Can you see Dennis just over his keyboard and just
No, I'm in a bad mood.
just gripping the keyboard here and then looking and
I'm gonna
looking.
throw something on my screen. Wait, look at that market move. 0.04% the SPY is up right now. Come on, I need movement. I need movement to make money. That's the one thing, that is not the trader's friend. And, and obviously we just touched on it there with our guest, but, volatility is the trader's friend. And I always, would say over my 17-year career, there is definitely a positive correlation between volatility and my P&L. And when the VIX is sitting around 12 and 13, well, I'm making money, but I'm not making a killing. When the VIX is up at 30, or when the VIX in the financial crisis was up at 80 or 90, I'm having career years. So because you obviously just have a lot more movement there. But the one thing you really need, unless you trade like Nick Shaheen, and he's the exception to the rule because he loves the lower volatility because obviously any calls or puts that he's writing there are expiring more worthless because he's always writing them out of the money. So, so there is strategies. I guess if you're a writer of options, it's nice when the big spikes aren't there. But then, you could argue, well, then the premiums aren't there for you to write next time. So as a trader, as a norm, though, we like more volatility here. And this is just pathetic. There's no movement here at all. Okay, so we get a lighter number. So I guess it wasn't light enough for the market to really care. I guess they still think, because I'm looking at the financials here, I'm looking at Bank of America actually rallying a little bit on this, and I guess they think the numbers probably not going to affect the Fed decision here next month. So obviously we're going to get one more to the December jobs number before the Fed's going to have to announce what they're going to do here in December. But everybody thinks the interest rates are going up, and the election's a wild card, so we'll have to see what happens after Tuesday because that's going to be the wild card here. I guess it's going to be quiet until after Tuesday, Joel.
And what do you think, though, just from a market psychology standpoint, that we couldn't rally at all?
On this number?
Yeah. Nothing.
I think but we're not selling off either here, though. I just think this is nobody's just reacting on it. I don't see a lot of volume. Obviously there's more volume than there was, but you think about the contracts flying through here, when we were talking about the jobs numbers a year ago. Now it just seems like there's just not much action at all. People are just standing here now. And I do think, what are you going to say, Spencer?
Can I offer a theory that maybe because all the traders in Chicago are just partying and not
Is that what it is?
Not watching.
Is that why we're quiet here? Everybody's just celebrating the Cubbies?
I don't know. All right, it's 8:35. Let's go grab our second guest of the day, Tracy Reiniak. She's a stock strategist at Zacks Investment Research. We'll be right back with Tracy.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Alcanan, along with Dennis Dick and Spencer Israel. And we have Tracy Roniak on the line. She's a stock strategist at Zacks Investment Research. Tracy, how you doing today?
I'm doing real good.
Well,
kind of crazy here in Chicago today.
Oh, really? Are they still partying in the streets?
Oh, yeah, we're going to have the big parade today and the rally and all that, so it'll be fun here.
Well, you know
Spencer,
what's... Go ahead.
Spencer just said, and we'll ask you this theory. He says the muted volatility out the jobs report is all due to the Cubs winning the World Series, and obviously everybody's just partying and they're not in the trading pits.
That could be, actually, because the number of people I see out on the streets right now definitely implies that they're all down at the parade route. So, yeah.
Well, we got to talk about something more important to the Cubs and more important than the stock market, and that's Michigan football. Are you excited?
Oh, yeah.
Yeah, undefeated here. I'm taking Spencer to the Maryland game tomorrow. My buddy Spencer here is a Maryland grad, so he's going to have a life-changing experience of going to a Michigan game with me. So that should be fun.
Is this his first game?
Missed my first game.
In the big house?
Wow.
Yep.
Oh, my gosh. We might have to get that announced at halftime. Anyways, Tracy, the topic you want to hit on here is something that Dennis and I have been discussing in the last couple days and looking for some longer-term value in the market. Let's go to these generic drug stocks. They are getting crushed. You had that report yesterday about charges against this Summit company. It's hard to catch a falling knife here, but just talk about this general scenario and how you're approaching it.
Yeah, I mean that area, as you said, is just getting hammered. I'm waiting. I'm on the sidelines still, watching, but there's definitely going to be some opportunities here. The problem is we don't know which of the generic drug makers are actually going to have charges brought against them, if any. But apparently, allegedly, according to Bloomberg, there are going to be some charges brought by the Justice Department in December. Now, there might not be criminal. We don't know. It could be criminal. It could just be antitrust for the price fixing aspect of it. But, the market hates uncertainty. So we saw the results when they're all selling off. Some are really, really cheap right now. So I'm keeping a couple of them on my watch list, like Horizon Pharmaceuticals, that's HZNP. I'm watching that one. There's about 12 names, though, that you could be in that are all getting hit. And, it's just, again, unclear who's going to get the worst brunt of it. So until these stocks could continue to fall. So that's why I'm kind of on the sidelines right here. But some are trading only, 4 or 5 times earnings. So these are among the cheapest stocks, like in the entire stock market.
We were actually saying that, coincidentally on the show before this report came out yesterday, I was even pointing out on something like a Mylan Labs, MYL, it's trading with a multiple going forward of 6. Now, obviously, this new wild card comes in. I mean, when it rains, it pours. These things have been completely out of favor. Now they're potentially going to get charges brought against them from the DOJ, and the stocks get hammered here once again. Teva too. You look at that one, TEVA. It was once a very loved stock. It is now completely hated here by the market. Loses another 5 points there yesterday on this news. Yeah. And what's it going to take to turn this sector around? Because I agree with you, there is some value here. But, this obviously isn't good news for it here. And what's it going to take for people to actually start to get down and dirty, take their cash off the sidelines, and start investing in some of these beaten down biotech names?
We won't know until they actually bring the charges. And then we'll be able to tell, are any executives or management being charged criminally? and what are the fines going to be like? Because on the antitrust side, they're probably just going to fine them. So then once that's known, like how bad is the hit going to be on each company, then I believe everybody's going to dive in. So right now it's a little suspect still and everything's uncertain and no one knows. So you're going to see real huge volatility in these stocks. They could go much cheaper as the, December deadline supposedly is what everybody's reporting approaches. Just out of the uncertainty. But once that news hits is when the real big trade is going to happen in a lot of these, because you'll find some may not be charged at all. And in those cases, you're going to see huge spikes up in the stocks where they're not implicated as harshly as some of the other ones.
Raymond James analyst Elliot Wilbur, he issued a note there last night. Not sure if you had a chance to read it, but it was titled "The Generic Drug Industry Isn't Going Out of Business." And
Right.
what he was basically saying is that, and it says in the report that these companies, know the best solution to get this issue behind them is to reach a settlement and to pay the fine. So,
That's right.
So on that, if that does indeed happen, they get the settlement, do you think then, is that what you're talking about? You would probably see the spikes, coming and the money coming back into these issues if that does indeed happen?
Yes, for sure. Because everybody is acting like suddenly they're not going to be making any generic drugs anymore, which is not the case.
Yeah.
So, and the PEs are reflecting that. I think Lannett is trading at like 4 or 5 times. I mean,
Wow.
These are the cheapest I've ever seen.
LCI is Lannett, and just looking at that one here too. I mean, back in April, the stock was a $70 stock. You're now talking about a stock that closed at $17.25. It's bouncing back here this morning. I think some of the Raymond James note might be helping some of these companies actually, but because it's trading up at $18.10 here this morning. But this was $23. They hammered this stock here too. Almost felt like yesterday was maybe even a little bit of a capitulatory move. As traders, where he's talking about capitulation, the time when everybody just throws in the towel and says, "Get me the hell out." And it kind of feels like that a little bit yesterday in some of these stocks. I mean, I look at this Lannett chart, been going down, 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 and then boom, the whoosh. And it goes all the way down to 1675, and obviously now we're back at 1810. So, if you have a time horizon, if you just have a time horizon, let's say 5 to 10 years, do you think it's kind of safe to start nibbling here, maybe?
Oh, yeah, for sure. Yeah, if you have a longer time horizon, like I personally like to hold for a much longer time in my own personal portfolio. And I own Lannett. I actually bought it earlier this year when it also had everybody was panicking and it sold off pretty harshly. Now I'm almost back to where I bought it at. But yes, if you're looking down a couple of years, that's the way to start maybe accumulating positions in some of these. I said the same thing about the energy stocks in the last year or two. That was also a longer term type of trade. But if you have that long-term horizon, a lot of those companies aren't going out of business either. So
you like a short-term energy play, but there's only a few E&Ps that you like, and you're basing this perspective of, with crude around $45. Give us your outlook on this crude correction and what E&P companies might be on your radar.
Yeah, I like a couple of the smaller E&Ps right now. I like Whiting. They are in the Williston area, the Bakken up there, but they have a pretty good balance sheet. It's possible someone may end up acquiring them to get that Bakken play, a bigger player. But right now, I like them with crude starting to recover. They can start to make some money again once it's back up over 50. It is trading down around 45 right now. But, we're in like the 8th or 9th inning of this crude plunge. We're not at the beginning, we're towards the end, and the explorers are where you want to be when crude starts to recover. So I like Whiting, that ticker is WLL. And I like this other small E&P called Synergy. They're in the Wattenberg area in Colorado, which you don't hear as much about. You're always hearing about the Permian and then the Bakken. But in Colorado, now that they did not pass the anti-fracking measure there, they are able to, drill pretty well there. And Synergy also has a really good balance sheet, and their ticker is SYRG. So keep an eye on the smaller explorers that, have good balance sheets, because that has been an issue with some of them. They, haven't been able to survive. But I like these two.
Another sector you cover there, looking at the restaurants here, and there's obviously been, everybody's been talking about, and everybody loved McDonald's at the beginning of the year here, and now it's kind of hated here again on the street. Everybody's kind of thrown it out, and you also were talking about Domino's Pizza as well, and this has got to be one of the best moves. I mean, you just look at the chart here from the last 10 years of Domino's Pizza. If we go back to the financial crisis, it was $7. It's now $166. I like Domino's Pizza. If I'm
I
going
do
to the
too.
chains, I think they have great pizza, but like you were saying, when it's starting to trade with a multiple of 40, maybe that's
Yeah.
time to start ringing the register.
Yeah. Domino's has had tremendous growth, and a lot of it comes from that app. I mean, they were first in on the app, and they keep modifying it to make it even easier. Now you can just text at the company and they'll send you the pizza. There's that, and there's you can tweet at them now. They have a lot of really good technology that nobody else had, so that's given them an edge. But the pizza industry is kind of strange. Everyone knows Domino's and Pizza Hut and Papa John's, so there's those three big names, but it's really made up of a lot of the mom and pop neighborhood joints. And so there's a lot that the bigger chains can actually steal some market share. And that's kind of what you're seeing. Domino's has picked up a lot of momentum, again, with the app. And now they have a new loyalty program that I think is going to draw in more people. And they actually got a new sauce a couple years ago. People forget about this. It was 4 or 5 years ago. They redid their crust and their sauce, and it's even better than it used to be. People remember it being, kind of like cardboard. But they've changed a lot on their actual recipes. And I think, that they're building momentum on that, and they're huge internationally. People forget they have over 1,000 stores in India alone. That's their biggest international market. And so I like the Domino's play, but yes, it's trading at 40 times now. And it's just, I fear, even with these great quarters, it has double-digit same-store sales comp. They're one of the few restaurant chains that has managed to keep that pace up. But eventually they won't keep it up just because they won't. And then what will happen? So I'm a little bit leery of getting in at this level, even though they are executing amazingly well.
That's an Ann Arbor-based Michigan company, of course. And
That's
Tracy,
right.
before we let you go, could we get a little Go Blue out of you?
Of course, go Blue.
All right. We'll talk to you again soon. Tracy Reiniak. She's a star analyst over there at Zacks Investment Research. Tracy, we'll talk to you again soon.
Okay, have a great day.
Thanks, Tracy.
Little bit of a rally here, Dennis. No buyers, no sellers. Buyers are coming in now near the highs of the pre-market session, 2087.50, back up here. Getting a little bit of a creeper rally. Dennis, what else are you seeing? What's popping?
Hard to get excited about a little bit of a rally, though. Yesterday we said on the show, when we had a little bit of a rally yesterday, we're like, there's just sellers lurking here. And they came in and they started selling with, two hands there. And we were down significantly by the end of the day for the 8th straight down day on the S&P. And, so here we're bouncing back here again. I think the sellers start licking their chops again. So just like, for years and years, it was buy the dip. Right now, it's sell the rip or sell the bounce. And that's, this mentality, I think, for the next 4 days, because there's just too much uncertainty with the presidential election for money managers not to be taking profits on the pops. And there's a lot of profits to be had here. A lot of people still up a lot of money in a lot of different stocks. I know the biotechs and the drugs have been killed, but there's a lot of sectors that are still very near their 52-week highs. And those are the stocks that they're selling here on the pops.
And I just want to point out yesterday, it really took a long time for the market to decide what to do. We opened, obviously the regular open was at 9:30, and they just teased us between 2092 and 2096. You traded that area really almost till noon. It took for the market to make up its mind. Now, there's a little bit different drivers today with the unemployment number, so we could get a little bit more action. But definitely took a while for the market to make up its mind yesterday. Dennis, 8:49. We have about 5-6 more minutes here. Are there any earnings stocks or analyst ratings that we haven't covered yet?
Yeah, we'll jump into that in just a second. I just want to give you a quick imbalance look here. Interesting, I'm looking, at a few standouts here this morning with some large size here. Coca-Cola, 258,000 to sell here in KO, and that's actually knocking the stock down now. You can see since at 8:30 when that large sell imbalance did come out, KO has dropped 20 cents. And I mean, you can say, oh, what's 20 cents? But that's a big move for Coke. So, Coke moving 0.5% or 1% is a fairly large move this early in the morning here. So you're seeing that one sell off a little bit on a large sell and balance. Alibaba 72,000 to sell. The selling pressure did continue in that stock there yesterday, and obviously since their reversal off their earnings has not been that pretty there. Twitter has 59,000 to sell. There was somebody in the chat just saw this morning, just saying how Twitter's been actually fairly strong and holding up well compared to the overall market. I do believe that is just because there's so many people here who are still betting that there might be a bid still lurking or even another rumor still lurking. And if you were short Twitter here at this price, you think, what's, the meat is on the bone. I mean, they haven't been performing that well. They've already got the quarter out. I don't know what the driver is to drive it down. But I could see, many potential drivers here or, even any type of rumor that could drive it up. So that's why I kind of look at Twitter here and, short term, I think there's a tendency for it to, pop if there's another rumor. And there seems to always be every few weeks a new rumor coming up here on Twitter. Although the last time we had a rumor it didn't materialize, and the spikes on the, the takeout rumors are definitely getting smaller than they used to be.
Dennis, real quickly here. I mean, this is the kind of formations we love here. You and I have talked about this. Look at this wall building at $18 over the
Huge.
last 6 sessions, folks. The highs have been between 17.95 and 18.12. 6 sessions in a row, and I've had my finger on the button waiting for it to go through there. Good thing I've only hit it once or twice, and then I retract off it. But we'll see what happens in that. Dennis, we haven't talked specific strategy in a while, and we've probably done this before. But let's just use this Coke example here of trading imbalances. Now I know you have a couple different approaches to it. Seeing the sell imbalance. Why don't you just give a real quick, if you were trying to get ahead of the trade, and also how you might use it as an opportunity to pick up Coke on the cheap.
Okay, so there's a lot of strategies around the imbalances here, and when we're talking the imbalance, I'm talking about just for people who maybe are newer to the show. It's the numbers that come from the NYSE floor at 8:30, and usually we give those. So it's showing you the opening order imbalances. So these are orders that are priced to sell on the open here, and it's telling you there's 258,000 shares to sell, meaning referencing the 4203 price, there's 258,000 shares more to sell, or 258,000 shares is the sell imbalance, which is netting out the buys and the sells. So it's telling you that there's opening selling pressure here in Coke for the opening print at 9:30. That's why you're seeing the stock trade down, because people are selling ahead of it. So multiple strategies. At 8:30, you'll see a lot of times, maybe the stock's trading flat, comes out with a big sell imbalance. People will start hitting it in the pre-market, thinking, okay, what's a big sell imbalance? It's probably going to open down, so I'm going to hit it now, flat or slightly down, and try to cover it on the open and make some money. The other strategy, sometimes, the S&Ps are trading higher here. You look at Coke and you think, oh, well, it's going to open down significantly because of one seller. A lot of times, that'll give you a good buying opportunity, and maybe it'll pull back up to maybe where more fair value is. Now, what I will tell you is that, lately, though, those trades have been crowded. A lot of people playing that strategy, and some then slowly try to climb back later on. So there's lots of different strategies that revolve around these imbalances. It's just about timing and about how crowded the strategies are. I think I was just saying this on the show yesterday. Strategies cycle, and sometimes they're more crowded than other times. And when the strategy starts to get crowded, it stops working, and then people stop doing the strategy, and then it becomes less crowded because people have stopped doing the strategy, and it starts working again. There's no better example than that with the imbalance strategies about fading the opening imbalances, because typically, the textbook, style is, when you see a huge sell imbalance in something and there's no news on it, it's to buy the open and then sell it back at fair value. But that, like I said, that textbook strategy has not been working that well lately, probably because liquidity is lower. And with liquidity lower, you don't have any outs, and there might be a few people, a few too many people that play that strategy, and then the liquidity isn't there for them to get out, and they roll over, and they get scared, and there's a shakeout. So it's all about a lot of different dynamics that go into that. But the classic strategy is, when you see a huge sell imbalance with no news on it, is to actually buy the stock. It's counterintuitive, but to buy into the weakness and then flip it out when it starts to actually show some strength, as other maybe institutional managers come in to buy the stock on the cheap.
And two other things to add on that. Dennis always looks to see if there's any kind of news on the stock or
Yeah, if
ratings
there's news,
change.
all bets are off,
And then
really.
finally, you will look at a support level to see. You're just not indiscriminately just going to go out and put a bid out here at Coke. You'll take a look, maybe if it's opening into a potential support area. That was something that will you'll look in factor in that in as well. 837. I don't think I had the answer to this question here, Dennis. And Flack you at UK was asking: is there any significance in the divergence between the advanced decline line and the number of new lows and highs being made?
I don't follow any of that stuff.
Yeah.
So I know what, but with my technical analysis, and I'll tell you, I do a lot of different things. I'm looking at a balance. I'm looking at a lot of different factors. Technical analysis, is one tool in my toolbox. So there's so many traders that just rely purely on technical analysis, and they're going to dive into all the different technical, formations that they can see using advanced decline lines, using, all of your moving averages, using your fibs, using all of the other stuff. My technical analysis, like I said, is one tool. It's probably 10% of my trading is the chart. Only 10%, believe it or not. And, it's all these other stuff. I'm more of an order flow trader where I'm looking, okay, well, there's 258,000 to sell here on the open. Your technicals aren't encompassing any of that information, for the morning here. So if you were just looking pure at a chart of Coke here, you're lost right now because it hasn't any trades today. You're just looking at pre-market chart. You might be saying, oh, why is it going down? It's going down because there's a huge sell imbalance. There's a reason behind it. I like to get to the reason behind the charts, so I'm trying to get ahead of the charts more than anything else. So when you're starting to jump into, advanced decline lines and you're starting to jump into, all the other technicals, it's too much for me. So I try to keep it very simple. My technical analysis, I can basically teach my strategies on TA in 5 minutes. And my strategies are support, resistance, and trends. That is pretty much, I don't use any moving averages even, and people say you're crazy not to use moving averages. But, 17 years I've been profitable every year of my trading career without moving averages. So, why do I need them? If you're making money using moving averages, by all means, continue to do it. But, when you get these death crosses and golden crosses and all the other fun things like that, I think it lags. I think all those indicators lag a little bit. And that's why, I'm trying to get ahead of the charts. And I think a lot of those other indicators are behind the charts. So, that's why I keep my technical analysis very simple. Joel does it very well with his levels, and I'm fully on board with that. You look at that Coke chart, you go out to the dailies on it, see multiple highs of 43, and I think right away, okay, why is there multiple highs of 43? There's probably a big seller there at 43. So I'm again getting behind the reasons to the charts. The reasons behind the charts are order flow, and if you can get to the order flow, you can actually get ahead of the charts.
Great wrap of that. Before we end the show here, Pfizer down 5 days in a row here, falling from its close October 27th, 32.48, under $30, $29.89.
Wow.
Not getting up much of a bump here in the pre-market. So big move down here for Pfizer. I guess what I'd have to say is it's on my radar here for something longer term, but maybe $28. I mean, boy, that'd be asking a lot here. But
this is going to be looked at back, on all of these pharmaceutical stocks, and I own Pfizer, my investment portfolio as well. And I'm starting to get, I'm probably, like I said, starting to get lighter weight in some of these, in my overall portfolio because the prices keep going down on these things. But, just like we were talking with Tracy earlier, I think there's some fabulous long-term buying opportunities out here. I don't know where the bottom is. These things are absolutely hated right now. But I will tell you, when everything is hated and you close your eyes and you buy it, a lot of times when you look back at your portfolio 2 or 3 years later, those were your best buys. And Pfizer, I think it's 4% dividend here now. There's value like crazy. It's one of the biggest pharmaceutical companies in the world. They're always coming up with new stuff. They got so much in R&D. I can't see how you can go wrong with Pfizer. $29 if you have a 5 or 10 year time horizon. And I agree with her on a lot of these other stocks. So, that Lynette, I wrote that one down here today, LCI, because that one's interesting to me as well. I mean, you can say these are value traps. They can get cheaper. That's why I would say, I never like buying, my investment portfolio. People, use margin. I never use margin. I don't even use, like margin for trading is one thing, but, an investment portfolio can be scary because if you're buying, on 2-to-1 margin and think gets cut in half, you just blew out your account. So, it's different from an investment standpoint. I don't like borrowing to invest. I do borrow to trade, but I don't like borrowing to invest. But if you got money, you're just sitting on here in cash. I can't see how, you're going to regret a decision of buying some of these pharmaceutical companies down here if you have a 5 or 10 year time horizon.
All right, Dennis, we will let you go. We're going to go to Spencer here. He's going to wrap up the show and tell us what we got on the docket for next week.
We got 4 new guests next week. Juan Mendoza from Peep Trade. Aaron Boski, he is going to be calling us from Shanghai. He specializes in the Chinese market. He'll be able to drop some knowledge on what's going on over there. Ross Cameron from Warrior Trader, and Lloyd Perlmutter is a retail expert. So 4 new guests, 10 guests total on the books for next week. So looking forward to all of those guys. If you missed any part of our show today, you can catch our podcast. We're on iTunes, SoundCloud, and Stitcher. Then, of course, the unedited live show is recorded and is available on YouTube instantly. If that's your thing, you can just go to the Benzinga TV YouTube page, and it's right on there. If you want a free 2-week trial of Benzinga Pro, just call us up 313-723-2000, or shoot me an email, spencerisrael@benzinga.com, if you'd like. Again, Benzinga Pro, it's Benzinga's real-time news platform. It's great for anybody who wants to stay on top of what's going on with the markets. You can just go to pro.benzinga.com for that as well. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. 9:01, that's it for us. We're going to wrap it up for the week. Hope everybody has a good rest of the day and a good weekend, and we will see you guys on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.